I'm chatting with Priscilla Sefoka. She is a tax consultant at Tax Consulting SA. Priscilla, appreciate the time. It is tax time and we can make some claims on our medical expenses. The first point is I was pondering how much, but in the note you sent out, in terms of population, I mean, the Council of Medical Schemes says that in the 23-24 tax year, there was 40 billion rand of out-of-pocket payments. There's huge numbers out there that potentially taxpayers can claim T's and C's dependent.
Yes.
What are the rules of it? We've got qualifying medical expenses. We've got out-of-pocket medical expenses. What is the difference between those two?
Yes, Simon. Thank you for that question. Many South Africans inquire significant out-of-pocket medical expenses in a tax year, and they do continue to inquire about how they can use that to reduce their tax liability, right? Mm-hmm. We look to Section 6 Cap B of the Income Tax Act, and that is what permits taxpayers to claim additional medical tax credits. And this is on condition that out-of-pocket medical expenses align with the definition of qualifying medical expenses as set out in the Act.
What would be some examples of qualifying medical expenses?
The definition of qualifying medical expenses is broad. So then I would advise taxpayers to seek guidance from their trusted tax practitioners to determine which of those out-of-pocket medical expenses satisfies the definition of qualifying medical expenses.
I imagine some of it would be, for example, seeing a doctor, perhaps some prescriptions that weren't paid by the medical aid. Would those be some examples?
Yes, those would be examples of, I'll give examples, like you said, prescriptions. Mm-hmm. Prescriptions, you have a disability and you have to pay expenses which the medical aid will not pay for. Mm-hmm. And then you pay for it out of pocket. And
what is the process? I mean, I'm imagining SARS has some T's and C's in terms of what we can claim in terms of limits and the like. How does that work?
The expenses are set out in the Act. Mm-hmm. And most importantly, these must have been incurred in that respective tax period. Mm-hmm. 2, they must have been solely borne by the taxpayer and paid solely borne by the taxpayer and paid to a registered medical tax practitioner. Keyword, registered medical tax practitioner. And they must not have been recoverable by the taxpayer.
Okay, so there are some T's and C's. Are there limits? I mean, if I've got, maybe I had a really bad flu season or something like that, I imagine there's going to be some sort of limit as to how much I could potentially claim.
Yes, Simon, thank you for that question. In practice, we've seen successful claims ranging between 2,000 and 100,000, right? Yes, where taxpayers have incurred those expenses. And another thing, the additional medical tax credits is favorable to taxpayers who are over the age of 65 and have a disability, or their dependents as defined have a disability. And those dependents could be their spouse, their children, or their spouse's children.
Okay, that's an important point. I hadn't actually thought of that. Dependents as well. So, I mean, the obvious one is my children are going to be my dependents. And of course, they might have incurred costs too.
Yes, that you paid for as a taxpayer.
I'll leave it there. That's Priscilla Sefoka. She's tax consultant, Tax Consulting SA. Appreciate the time.